Hello, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today, we will discuss leave encashment. We will discuss one of the important points of salary hat, leave encashment. In this class, we will discuss what is leave encashment and taxability about the leave encashment. And we will discuss or we will calculate the taxable amount of leave encashment and the exempted amount of leave encashment. The leave encashment is an amount which is taxable under the head of salary. It is taxable under the head of salary. So now we will discuss leave encashment. We will discuss leave encashment, leave salary or leave encashment. Normally, there are many of the employees who are allowed to take leave during the period of service. In the organization, the employees are allowed that they can take the leaves. They can take the leaves. There are some particular leaves which are provided by the employer to the employee without the deduction of salary. Means the employee can take their leaves during the service, during the period of service without the reduction in the service, means without the reduction of salary, means they will receive the amount of salary. Employee may avail such leave or in cash the leaves is not available. The employee, they can avail these leaves, they can use their leaves, but in case the leaves is not availed, in case if these leaves are not availed by the employee, then the leaves may be left, it may be left or be accumulated for the future. If there is any employee who is eligible for the leaves, for the particular leaves, if he will not avail, if he will not avail these leaves during the period of service, then these leaves may be lapsed or it may be accumulated for the future period, or it may be allowed to be in cash every year or at the time of termination or at the time of retirement. For the example, Mr. Ram, he is working in an organization and he can take he can take 10 leaves, he can take 10 leaves in a month, sorry, in a year. He can take 10 leaves in a year. If he use these leaves in a year, then he can avail, he can avail these leaves. If he will not avail these leaves, if he will not avail these leaves, then there may be some option. Number one, it may these leaves may be, these leaves may be lapse, these leaves may be lapse. And number two, it may be accumulated or it may be carry forward for the future period. It may be accumulated or carry forward for the future period, or it may be in cash. It may be in cash every year or at the time of termination or retirement. It may be in cash, means the employee can receive cash. The employee can receive the amount in the respect of these, in the respect of these in cash, in the respect of these unused or unavailed leaves. If Mr. Ram, he will not use, if he does not use these 10 leaves during the period, then he can encash it. If it is in the provision of company, if it is in the provision of company, then he can encash these leaves, or he may receive the amount in the consideration of these unavailed or unused leaves. So, so in this case, if there are leaves, if it is availed, no issue. If it is not availed, it may be carry forward, it may be lapsed, or it may be encashed. It may be encashed. So in this case, if these leaves are encashed, so in this case, the payment is received by the employee from the employer. If the leaves are in cash, so in this case, the payment is received by the employee to the employer from the employer. Then such amount will be taxable under the head of salary, because if there is any amount which is received from a person, and there is the relationship of employer and employee, and there is the relationship of employer and the employee, then such amount will be taxable under the head of salary. Then such amount will be taxable under the head of salary. So in this case, such leave encashment will also be taxable. It will also be taxable under the head of salary. But section 10, subsection 10AA. Section 10, subsection 10AA provides some exemption. There are some provision relating to the exemption in the respect of amount which is received by the way of encashment. Is that section 10, subsection 10 double A provide the exemption in the respect of such a leave encashment. When such a amount of leave encashment earned by the employee at the time of retirement, at the time of retirement, whether on superannuation or otherwise. Section 10, subsection 10 double A provide exemption in the respect of amount, which is received by the way of encashment, which is received by the way of encashment of unutilized leaves, which is earned by the employee at that time of his retirement, whether on superannuation or otherwise. So the amount of leave encashment will be taxable under the head of salary, but section 10, subsection 10 AA contain the provision of exemption. So now we will discuss these provisions. We will discuss how much amount will be exempted, under section 10, subsection 10 AA, and how much amount will be taxable under the head of salary in the respect of leave encashment. So now we will discuss section 10, subsection 10 AA. Section 10, subsection 10 AA. Exemption of amount which is received. Exemption of the amount which is received by the way of leave encashment. When there is any leave which is in cash by the employee, then it will be taxable under the head of salary. But section 10, subsection 10 AA contain the exception. So now we will discuss these exceptions. Now we will discuss these exemptions. The provision of section 10, subsection 10 AA are as follows. Number 1, in the case of government employee, if there is any leave encashment received, then it will be fully exempted. If the amount of leave encashment is received by the government employee at the time of retirement, then it will be fully exempted. In the case of government employee, such amount is fully exempted. In the case of non-government employee, first, in the case of government employee, for the example, Mr. Ram, he is the government employee. At the time of retirement, he received 2 lakh rupees of leave encashment. He received 2 lakh rupees of leave encashment as leave encashment. He is a government employee. He received 2 lakh rupees as leave encashment. Then such 2 lakh rupees will be fully exempted. It will be fully exempted. Nothing will be taxable. It will be fully exempted in the case of government employee. In the case of non-government employee, in the case of non-government employee, if there is any employee who is not a government employee, if he is not a government employee and he received the leave salary, he received the leave salary at the time of retirement. If he received the leave salary at the time of retirement, then it will be taxable. But there are certain exceptions. Means such amount such amount will be exempted up to the certain limit. Such amount of leave encashment will be exempted up to the certain limit. The limit will be 3 lakh rupees or leave encashment which is actually received. So number one is 3 lakh rupees. Number two is leave encashment which is actually received. And number three, 10 months salary on the basis of average salary of last 10 months. 10-month salary. Number one is 3 lakh rupees. Number two is leave salary actually received. Number three, 10-month salary. And number four, cash equivalent of leaves. Cash equivalent of leaves based on last 10 months average salary immediately preceding the date of retirement. Immediately preceding the date of retirement, cash equivalent to the leave, cash equivalent of the leaves, and based on last 10 months average salary, immediately preceding the date of retirement, to the credit of employee, to the credit of the employee at the time of retirement. Or earned leave entitlement cannot be exceed 30 days for every year. The earned leave or the unavailed leave shall not be more than 30 days. It should not be more than 30 days for the every year of service which is rendered for the employer by the employee. It should not be more than 30 days each of that year. So in the case of non-government employee, the exempted amount of leave encashment will be 3 lakh rupees, actual amount of leave encashment received, or 10 months of salary, or cash equivalent of the leave, which is credited to the employee, whichever is lower. There are some points before the example. First we will discuss some notes, some important notes. Number one, leave salary received during the period of service is fully taxable. Number one, the leave encashment which is received during the service, if the amount of leave encashment is received during the service, then it will be fully taxable. These exemption only applicable in case when leave encashment is received after the retirement. It is received after the retirement or termination. If leave encashment is received during the service, then it will be fully taxable. Number two, where leave salary is received from two and more employees. If the amount of the leave encashment is received from two and the more employee in the same previous year. For the example, Mr. Ram, he is working in A Limited as well as in B Limited, and he has received leave encashment from both the employees in the same year. Then the aggregate amount of the leave salary which is exempted from two employees cannot be exceed 3 lakh rupees. Is that the exemption of leave encashment shall not be more than 3 lakh rupees if any employee receives such a leave encashment from more than one employee. So in this case, the amount of leave encashment exemption shall not be more than 3 lakh rupees. Number third note, where leave salary is received, in any of the previous year from a formal employee. If leave salary is received in any of the previous year from any of the formal employer and again received from another employer in the later previous year, then the limit of 3 lakh will be reduced by the amount which is already exempted. If Mr. Ram, he has received leave encashment from A Limited in the previous financial year of previous financial year, and the exempted amount was rupees 1,50,000, and the exempted amount was rupees 1,50,000. In the next year, he has received leave encashment from B Limited, 3 lakh rupees. And in this case, the exempted amount shall not be more than 1,50,000 because 1,50,000 is already 1,50,000 is already taken by Mr. Ram in the previous year. So in this current year, it should not be more than 1,50,000. The exemption should not be more than 1,50,000. Is that Mr. Ram, he is working in A Limited and he is working in B Limited. In 2000, in 2019-20, so in 1920, he has received 2 lakh rupees as leave encashment. As leave encashment. And exemption was 1,50,000. So the taxable amount will be 50,000. In 2020 and 21, he has received 3 lakh rupees as leave encashment. Leave encashment from B Limited. From the B Limited, he has received 3 lakh rupees as leave encashment. And in this case, the exemption shall not be more than 1,50,000. Is that 3 lakh minus 1,50,000? Because 50,000, this one is 50,000, is already taken by him in the year 2019-20. Now it should not be more than 1,50,000. Now it should not be more than 1,50,000. So it should not be more than 1,50,000. Next note, salary for this purpose means salary for the purpose of leave encashment means basic salary plus DNS allowance. Basic salary plus DNS allowance. If provided in the term of employment for retirement benefit. If the part of DNS allowance which is provided in the term of retirement benefit for the retirement benefit. And salary will also include commission which is expressed as the fixed percentage of turnover. If there is any commission which is expressed as fixed percentage, then it will be included. Just like salary will be for the leave encashment. Leave encashment salary will be basic salary plus DA, which is for the retirement, for the retirement benefits, plus commission if it is fixed percentage. on turnover. Fixed on turnover. If it is fixed on turnover, then the salary will be, for the purpose of leave encashment, the salary will be the total of basic, total of basic salary, DNS allowance, and the commission which is fixed on percentage. The commission which is fixed on percentage or turnover. Average salary. What is the meaning of average salary? Average salary will be determined on the basis of salary drop. Average salary, average salary means the salary which is determined on the basis of salary drawn during the period of 10 months. The average salary means the salary which is drawn during the period of 10 months immediately preceding the date of retirement. Immediately preceding the date of retirement, whether on superannuation or otherwise. Means average salary will be the salary which is drawn during the period of last 10 years, during the period of 10 months, sorry, immediately preceding the date of retirement. So these are some important notes. So for understanding the full concept of leave encashment, we will discuss it by the way of graph. We will discuss it by the way of graph. Number one, if the amount of leave encashment is received by the employee, if it is received by the employee, whether government employee or whether not government employee, if there is any amount of leave encashment is received by any of the employee during the employment, or during the period of service, then it will be fully taxable. It will be fully taxable if it is received during the employment. If it is received on the retirement, or if it is received on the retirement or termination, whether on superannuation or otherwise, if it is received on the retirement, then in the case of government employee, it is fully exempted. In the case of government employee, the amount of leave encashment will be fully exempted. It will be fully exempted. Number two, if it is received by the non-government employee, if it is received by the non-government employee, then the amount of exemption shall be, the amount of leave encashment exemption shall be 3 lakh rupees, 3 lakh rupees. Number two, leave salary which is actually received, leave encashment which is actually received. Number one, 3 lakh rupees, or number two, leave encashment which is actually received. Number three, 10 month salary, 10 month salary on the basis of average salary of last 10 months. 10 month salary on the basis of last 10 month salary. And fourth, cash equivalent of the leave, cash equivalent of the leaves, and it will be calculated on the basis of last 10 month average salary. Two is created at the time of retirement. Cash equivalent of the leaves which is created at the time of retirement. In this case, the leave encashment shall not be more than, it cannot be more than 30 days for every year of service. It shall not be more than 30 days for every year of service. So, in the case of government employee, it is fully exempted. In the case of when the amount is received during the employment, then it will be fully taxable. If it is received by the non-government employee, then the exemption is calculated on the basis of these 4 points, and whichever is lower will be exempted, and the balance amount will be taxable. So, for the purpose of this, we will discuss an example so that we can properly understand such a concept or such a exemption and taxability of leave encashment. Mr. Gupta, he retired on 1st December 2020. Mr. Gupta retired on 1st December 2020 after the 20 years services and 10 months of service. Means 20 years and 10 months of service. and he received leave encashment of rupees 5 lakh. Mr. Gupta, he received leave encashment 5 lakh rupees. So the received leave encashment is 5 lakh. Basic salary is 5,000 rupees per month. 5,000 rupees per month and 1,000 rupees was increased with effect from 1st April 2020. From 1st April 2020, 1,000 rupees was increased. DNS allowance 3,000 rupees. DNS allows 3,000 rupees per month. 60% of 3,000 rupees is for retirement benefit. 60% of such 3,000 is for the retirement benefit. Commission is 500 rupees per month. Commission is 500 rupees per month. Bonus 1,000 rupees per month. 1,000 rupees per month. Leave availed during the year. Sorry, during the service. Leave which is availed during the year. 480 days. During the year, 480 days. Sorry, during the service. During the service, the leave which is availed by Mr. Gupta is 480 days. He was entitled to 30 days. Leave every year. He is entitled for 30 days leave for the every year. So on the basis of such a detail, there is a requirement to calculate taxable leave salary. On the basis of these information, there is a requirement to calculate taxable amount of leave. Taxable amount of leave salary. Point one, where Mr. Gupta is a government employee, and number two, where Mr. Gupta is a non-government employee. In the case of first point, when he is a government employee. In the case of first point, when he is a government employee, fully amount will be exempted. In the case of government employee, the fully amount will be exempted. So the taxable amount will be zero. The taxable amount will be zero because as per the provision, if there is any amount of leave encashment is received by the government employee at the time of retirement, then such amount will be accepted. Then such amount will be accepted. So when he is a government employee, leave salary which is received by him at time of retirement is 5 lakh, exempted amount 5 lakh. So the taxable amount will be zero. Taxable amount will be zero. And when he is a non-government employee, then the exemption will be number one, actual amount of leave salary received or 3 lakh rupees, and number three, 10-month salary. 10-month salary based on average salary. 10-month salary based on the average salary of last 10-month salary based on average salary of last 10 months. And 4 point, cash which is equivalent of leave. Cash which is equivalent of leave standing at the credit of employee, which is based on last 10 months, which is based on last 10. So in this case, we will discuss. First is the first point is for the exam. We will discuss it. Gupta. When he is a government employee, then fully exempt. Fully exempt. When Mr. Gupta, he is a government employee and he receive leave encashment, then it will be fully exempted. It will be fully exempt. When he is a non-government employee, he is a non-government employee. So in this case, exemption is a least of the following. Follow. Number one. Number one, 3 lakh. Number two, amount received as leave encashment. As leave encashment. Number three. Number three, 10 months salary. 10 average of 10 months. And cash equivalent of leaves. Cash equivalent of leaves. So we will calculate it on the basis of such limits. Whichever is lower will be exempted. Whichever is lower will be exempted. So in this case, the salary received, sorry, leave encashment received 5 lakh rupees. Leave encashment received amount is 5 lakh. It is received 5 lakh. And third point is 10-month average salary on the basis of last 10-month average. Last 10-month average. As per the question, the basic salary was rupees 5,000 rupees per month. And from the 1st April 2020, it was increased. It was increased 1,000 rupees. It was increased 1,000 rupees. So it was increased 1,000 rupees. So from February to November, we will discuss 10 months. February to November is total 10 months. So for first 8 months, the salary was 5,000 rupees. The salary was 5,000 rupees. So then 5,000 into 8. The salary is number 3, 5,000 into 8. The salary was 5,000 into 8 plus 4,000 into 2 plus 4,000 into 2 plus DNS allowance. The DA was 3,000 rupees. The DA was 3,000 into 60% into 60% into 10 months for the 10 months. So into 10 divided by 10, because we will calculate average. So divided by 10. So it will be divided by 10. It will be divided by 10. So it will be 66,000 rupees. Means we will take last month's salary from February to November. In the month of February, the amount of salary was 4,000, because it will increase from April. So for the month of February and March, the salary was 4,000 rupees. The salary was 4,000. So the 4,000 for February and March, 4,000 into 2, February and for March, plus 5,000 from 1st April to November. April to November 8 month, 5,000 into 8 plus DNS allowance salary, basic plus DA plus commission if it is fixed. Basic plus DA which is for the retirement benefit. For the retirement benefit, it is 60% of basic. So 3,000 is the DA into 60% for the retirement benefit into 10 months. Divided by 10 months. So the average is, so the average is, or the 10-month salary is 66,000. So it will be 66,000. 66,000. It will be 66,000. And the 4 point. And the 4 point, cash which is equivalent to the leaves. Cash which is equivalent to the leaves which are unavailed. The cash equivalent to the leaves which are unavailed. So the unavailed leaves are total availed leaves 480, and the unavailed leaves he can take maximum 30 leaves in a year, and he serve his service for the 20 year. So he can take maximum 600 leaves, but availed services are 430. So 480. So the balance unused leaves or unavailed leaves are 120. Unavailed leaves are 120. So cash equivalent of 120 will be, cash equivalent for these 120 leaves will be 120. Means the average salary for the 10 month, average 10 month we have calculated in point 3, 66,000. This is for the 30 days. So 66,000 for the 30 days into 120 days divided by 10, because last 10 month, on the basis of last 10 months. So it will be, so it will be as per the 4 point, as per the 4 point, he can take the leaves, he can take 30 days for each year. Total year of completion was, completed year was 600. Sorry, completed year was 20 years. Availed, availed leaves 480. So the balance are 120. 120 are ये unavailed. Unavailed leaves. Unavailed leaves are 120. So the amount of such 120 will be cash equivalent to, cash equivalent to such 120 days leaves will be 10-month average salary 66,000 divided by 10-month average into 120 days divided by 30 days, because this is for the 30 days. So it will be, so it is 120 days, it will be 26,400. It will be 26,400. So as per the point 4, 26,400. Means we will calculate the cash which is equivalent to the unused leaves. Cash which is equivalent to the unused leaves. Unused leaves are 120 days. 120. So the average salary was, 10-month average salary was, as per the point 3, it was 66,000. It was 66,000. So 66,000 divided by 10 months, because it is for the 10 months. It is for the 10 months. Into, we will calculate for 120 days. We will calculate for 120 days. Divided by 30 days. Divided by 30 days. So it will be 26,400. So the exemption will be least of the following. Exemption will be least of the following. So the exemption will be 26,400. Exemption will be 26,400, and the taxable amount will be, the received amount is 5 lakh minus 26,400. 4,73,600 will be taxable. It is 4,73,600. 4,73,600 will be taxable. It will be taxable under the head of salary. 26,400 will be exempt as per section 10, subsection 10 double A, and 4,73,000, 4,73,600 will be taxable under the head of salary when he is non-government employee. When he is a non-government employee. If Mr. Gupta is a government employee and he received 5 lakh rupees during the employment, then total 5 lakh rupees will be taxable. Then total 5 lakh rupees will be taxable under the head of salary. Total 5 lakh will be taxable under the head of salary. So, on the basis of this, we have covered the concept of leave encashment. What is leave encashment? How to calculate taxable amount of leave encashment, and how to calculate the exempted amount of leave encashment. On the basis of this, you have understand. I think you have understand the concept of leave encashment. Thank you so much for watching this video. Okay, bye bye and have a nice day.